The biggest question for NFTs, and you're right, it's a very fast-growing asset class, is whether it's a security or not. When an NFT in its smart contract has a royalty associated with transfer of ownership, it is distributing capital. And that generally is interpreted as being a security, no different than a bond paying interest or a stock paying a dividend. But we haven't had a ruling on that yet. More concerning right now is what you said earlier, that there's a lot of scamming going on in the NFT space. So it'd be much better for all of us, and I'm a huge believer in NFTs, if we could find some way of providing a new level of security so that you as an owner who have made an investment, whether you've done it on a centralized or decentralized wallet, should have some sense that there's security and an auditable position and a path to understand, when something does go awry or it's been stolen, that there is a way to pursue it. And we don't have that right now. So I would say investments in much more secure wallets and better functioning wallets would expand the NFT space geometrically. So the biggest challenge that it's holding back NFTs, in my view, in terms of becoming investable with institutions. And remember, I always have my institution hat on because that's where all the money is. It's great that we as early investors in crypto, all things crypto, including NFTs, are willing to learn and spend our time and take risk out there. But there's billions and billions of dollars of institutional capital that wants to go to work there too, that we have not given them the compliance infrastructure yet to be able to do that. For example, when you buy a stock or a bond in a pension plan, for a university in Geneva, they immediately are able to see at the compliance department how much you put on, whether you use leverage. The position is reported at the end of the day. The auditors can see it anytime they want, and the regulators have a report generated that they get every quarter, every month, or every week, or every day, depending on the geography you're in. We have nothing like that in anything on crypto. You have to manually do it yourself. That makes regulators very nervous. There's no audit trail in most of these platforms. And so when I talk to institutions about NFTs, they say, well, is there some piece of software you have that we can attach to our compliance department now so we can openly buy, purchase, trade NFTs the same way we do stocks and bonds? That does not exist yet. Now, companies like FTX are working on that. And that's why I'm associated and a shareholder of XTX and a paid spokesperson. They had a fantastic ad on the Super Bowl last night with Larry David. It was very funny. And at the end of the day, that's why I invest in these platforms. We're going to grow it to be institutional grade, and NFTs will continue to grow in value because the institutions, just like Bitcoin, will be willing to trade them. It's one of the most exciting areas of crypto. You are absolutely right. Huge potential. If you went back to the gold rush, it was driven by greed. It was driven by people that were willing to take huge risks to go and explore and find gold and become wealthy. And the people that actually got wealthy provided the infrastructure to them that eventually provided all the equipment they needed to build gold mines. I'm in the camp that you need to be in both. I want to invest in NFTs, and I do, but I also want to invest in all digital infrastructure, which is why I'm so interested in the exchange licenses that are being granted all around the world. I'm very interested in investing in those wherever they pop up because they're not coming to the US anytime soon. They're starting in other jurisdictions like Canada, like the UAE, and other countries. And so you have to be a bit of an explorer to understand that we're the early phase. And greed does drive a lot of motivation. But so does theft. And most people are not willing to admit it. I am. I've had a wallet that has been hacked. I've lost assets. I've lost NFTs. And I've learned my lesson about security. And I have a different protocol now. And it's very hard to steal my assets now. But I've had to learn that. We've got to make it easier. And so this cowboy notion of, the wild, wild west, which was there in the great gold rush, is where we're at in NFTs right now. But over time, there's so much interest in them, whether it be art or authentication technologies or real estate transactions or whatever it is, because it essentially is a licensed wallet with an audit trail, which is very productive. We will continue to see advancement here. It is not going away. In other words, the genie is out of the bottle, and you're just going to have to stomach the volatility, but it has huge upside.
Knowing that, for example, China is banning crypto, or there are other countries, other jurisdictions that are banning cryptocurrencies, And there is also a lot of negative environmental impact that is associated with mining and the whole decentralized infrastructure. With that in mind, what future for cryptocurrencies can you envision or predict coming into the future?
You're talking about China banning Bitcoin mining, and there's other countries, including Russia, that are contemplating this as well. And you are right. What is driving this motivation are concerns about ESG. So let me walk you through what is happening with the capital. You know what I like to watch is the flow of capital. Where is it going? Because that will dictate what's going to happen in the mining industry. So 2 years ago, before there was any ESG concerns on Bitcoin mining, when the majority of awards were coming out of China, there was no talk about burning coal to make electricity that was environmentally harming Bitcoin. There were lots of miners, burning lots of carbon, whether it be gas or coal or whatever, to make coin, and nobody cared. And then you saw this movement with institutional capital. It really started with BlackRock, the largest institutional manager in the world that does a lot of sovereign wealth, etc. They put out a mandate saying, look, there are certain sectors of the economy that we no longer support. And one of those was anybody burning carbon, particularly burning carbon for Bitcoin mining. And so prior to this, the way that institutions were taking an allocation to Bitcoin mining was they would buy the stock of a company that was trading publicly that was a Bitcoin miner or Ethereum miner or a data center manager, whatever. So they could get exposure to a Marathon or Riot or whoever it was that they decided to take a position in as a proxy for owning Bitcoin. And the way these companies were talking about becoming carbon neutral, at that time they didn't care, but as the pressure came on for ESG mandates, they started buying carbon credits. Well, that's not going to work because you're going to start to see in this year, I'm speculating, that these large institutions are going to start demanding audits, carbon credit audits. And you don't want to be in a company's stock that has the risk of a carbon audit because the truth is it's almost virtually impossible to show and understand the tracking error of a carbon credit versus what you're actually burning in carbon. So all of the money is quietly moving right now to new mining companies, most of them private, that are going to use hydro, wind, solar, and nuclear power. Because if you use any of those options for mining, there is no carbon audit. There is no offset necessary. You're not burning carbon. The majority or many of the turbine-driven hydro facilities around the world in places like Norway or upstate Quebec or Manitoba or British Columbia or places in the Soviet, with Russia now, they have abundance of hydro that is not captured. And so I'll give you an example. One of my biggest investments right now is a facility being built in Norway in a village with 3,000 people where they're partners. We are using new stacks, very efficient mining equipment. We're building it out now, and we are part of the community there. We have power at less than 2 cents a kilowatt hour. Our stacks are remote. However, we're using the heat that's generated there for hydroponics and fish rookeries. And the stakeholders of that mine are many of the villagers that live there. But here's the key. Here's the key to this situation. The institutions that are backing it, and some of them are sovereign wealth funds, ask me one thing. Are the coins awarded going to stay on the balance sheet of this company? Because we'll be able to own the stock with the proxy that we know every coin was mined sustainably under an ESG mandate. And that's how we want to own our Bitcoin. If you're telling us you're going to sell off your coin, then we're not investing. We want to, so if you need more capital, come to us, we'll invest, but every coin awarded has to stay in the Norwegian company. Or whatever, we're doing the same thing in Quebec, we're doing the same thing in British Columbia and other jurisdictions, in Texas. That's the new mentality. That's what's happening right now. So a new generation of Bitcoin miner, an ESG compliant, non-carbon credit, institutionally backed, those are the new miners, and they're going to trade at a premium, and all of the old dirty miners are going to have to consolidate because nobody's interested in giving them capital anymore. There's no way for them to be clean and not be subject to carbon audits. This is going to be controversial. You're one of the first people I've been talking to about this because this just emerged in the last 3 months. But we are quietly taking our capital out of those dirty miners into the new clean miners. And that's the new generation of Bitcoin miners for the next 20, 30, 40, 50 years.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.